Instructions to get subtitles in French and Spanish will follow shortly.
Comment ajouter des sous-titres dans votre langue? Étape 1. Cliquez sur l'icône CC en bas à droite de la vidéo pour activer les sous-titres. Étape 2. Cliquez sur l'icône des paramètres. Étape 3. Cliquez sur sous-titres CC 1. Étape 4. Cliquez sur Génération automatique. 5e étape. Sélectionnez votre langue. À ce stade, vous devriez commencer à voir des sous-titres dans la langue que vous avez sélectionnée.
Cómo añadir subtítulos en tu idioma. Paso 1. Haz clic en el icono CC en la parte inferior derecha del vídeo para activar los subtítulos. Paso 2. Haz clic en el icono de configuración. Paso 3. Haz clic en subtítulos /diagonal CC 1. Paso 4. Haga clic en autogenerar. Paso 5. Selecciona tu idioma. Selecciona tu idioma. En este punto deberías empezar a ver subtítulos en el idioma seleccionado.
Let me start with a sort of general question that's come in, which is just, this seems really technical. Some of us are through technical accountants. This is great. And I can see some really good feedback in the chat. We love this. We love this. I know other people have watched this and just gone, whoa, this is too heavy and technical. Could you speak to that briefly first before we get into some technical questions?
I certainly can, Sam. And hello again, everyone. It is complex and technical. Hopefully it's understandable. The purpose of this section is to ensure that we have a conceptually consistent set of guidance that is appropriate for NPOs and that may also be useful to assist users and preparers of the general purpose financial reports of NPOs. For the vast majority of the time, no one will ever need to look at this section. A member of a finance team in an NPO will look at the relevant section of the guidance for whatever transaction they're dealing with, say revenue from grants or expenses on employee benefits, and they will just apply that guidance. Section 2 can remain in Section 2 and will never need to be examined. I like to think of it a bit like the guidance is like a building. When you're in a building, you're using the individual rooms, you're using furniture, you're using the appliances. Those things are day-to-day sections of the guidance. It's very rare you need to look at the foundations or the plumbing or the electrics. Those things are very important and they make everything else work, but it's very rarely you need to look at them. And normally when you do look at them, you're going to get somebody in who understands the technical nature of them. So yes, it's technical. We're hoping it's as understandable as we can make it, but it is really aimed at that sort of technical accounting audience, auditors and standard setters.
Brilliant. Thank you, Philip. I love that analogy. I'm going to use that. Karen, can I just check if the microphone is on in the translator app? Because I'm not seeing the transcription.
The microphone is on, yes.
Okay, so maybe it's just internet. Okay, there's a great question here from Christopher Fife about equity. So there's a quote in the video that says equity is likely to be uncommon or nominal. But is this not reserves? Is this not one of our 5 main sections? We've got income, expenditure, assets, liabilities. Isn't equity our 5th one? How would this be uncommon? Would you like to speak to that?
Yes, so we had as Sam will know and Karen will know, we've had a very long discussion about the inclusion of equity within the guidance and whether actually we are overstating its importance by including it. We fully expect it to be quite uncommon, and in the vast majority of cases, if it does exist, it will be nominal. It will be, I'm from a UK background, so it will be that nominal initial almost like investment to get a charity registered. It'll be a nominal figure of say £100 or €100 or $100, and nothing will ever again happen to that balance. We have those seen in other jurisdictions, and bearing in mind this is an international set of guidance, there are some structures of entities that could be described potentially as NPOs where equity is more common. So we've decided to include it, but not to overstate its importance. And hopefully that does, if you look at the authoritative guidance, hopefully that does come across. What is going to be important, I think, for nearly all NPOs is what has been, Christopher, has described as reserves. For us, those are those funds with and without restrictions that are included within net assets. So the funds without restrictions are what we'd call like free reserves that are available for any of the purposes of the NPO. And funds with restrictions are those reserves where, say, an external party has provided resources and put a restriction on their use. So hopefully the video, when we moved from equity into those funds with restrictions and funds without restrictions, has shown the importance of reserves. We do consider equity needs to be there for those situations where the guidance is required. But again, I think in the vast majority of cases, it's just going to be that nominal amount and nobody will ever need to look at equity again.
Great, thank you, Philip. So yes, reserves is there. There's a good question here. Societal and public accountability, have they been defined? And I know we looked at this yesterday in terms of the webinar on what is an NPO, but those terms are referred to again in this video. So could you speak to that, those terms of societal and public accountability?
Yes, so public accountability is very much the IFRS definition. So if an entity has traded shares or debt, or if it is holding assets, technical term now, but in a fiduciary capacity as its main business, that will be a publicly accountable entity, and that is defined in IFRS. That is a definition that we have included in the glossary of terms in the main guidance. And for all terms, I think it's quite important to know, for all terms that are generally used in international standards, if that term is generally used, we've used the same term and the same definition in INPAG, so there is consistency across both IFRS, IPSAS, and INPAG. Societal accountability it's a sort of broader a broader view of accountability that, again, we have defined in our glossary, but it sort of speaks to the importance of NPOs to society at large. NPOs provide a lot of goods and services on which individuals may rely. They receive funding from either donations from individual members of the public or donors and are accountable for how those are used. And as we've noted in the video, they also, in some jurisdictions, have preferential treatment. They may get tax concessions. So this societal accountability, it's a very expansive view of how NPOs are actually not just accountable to their staff and the individuals who use their services, but actually society as a whole.
Brilliant. Thank you, Philip. Now we have to be, there's lots of questions coming in, so we might need to be quite brief. There's a great one here. Cost benefit exemptions are mentioned in here. They're frequently used inappropriately. How do you propose to stop that happening?
Very good question. So generally, cost is a pervasive constraint. I think is generally recognized from all financial reporting. The cost of providing something has to be equal to or less than the benefit to users. Now, that is very much the individual NPO and the preparer's role in determining what their users want and what the cost of providing that is. We can provide the general principles, but the application of those principles are, I think, very much the NPOs to consider, bearing in mind what their users want and need. There is, though, then the question of the broader undue cost and effort principles that we have included from IFRS for SMEs. I know when the ISB were updating the IFRS for SMEs, they were considering whether to include those or not in the new exposure draft. Some jurisdictions, I think the UK, which has applied IFRS for SMEs, has taken that out because they think it is misused. because we are following the international standards rather than any jurisdiction standards, we have included it. But there is, I believe, a specific matter for comment where if you think this is something that may be generally misused, you could note that in your feedback, and it is something that, again, we can look into. And if there is a general sort of groundswell of opinion that actually in the NPO context this isn't appropriate, it is something that we could remove for the final guidance.
Brilliant, thank you. And it's like any other accounting guidance, the application of it is linked to audit and regulation and things like that, isn't it? So same as any other. Super. There's a great question here, which I might put to Karen. IPSAS has guidance or requirements on reporting a comparison of actual results against budget. Now, that would be in a national context. For NPOs, it's more often at a sort of grant level or project level. Is this worth including in INPAG?
I was going to be kind of cheeky and say, come to tomorrow's event and I'll give you an answer to that when we'll be talking about financial statements. Look, it is something that is there for people to comment on. There is a question in the exposure draft about comparatives. Frequently, we talk about comparatives in terms of 1 year to the next, but comparatives can equally apply to budget. But I think people's highest interest in budget is when people are talking about projects or programs. I think that's when it really resonates with people and with agreements that NPOs have with their funders. We're doing some work that we will expose in Exposure Draft 3 to look at the possibility of providing some guidance around what, for the time being, we're calling a supplementary statement. And that supplementary statement will be focused on projects or programs. And one of the things that we're looking at in terms of that presentation is whether comparison to budget is something that could be produced as part of that statement. This statement's not going to be prescriptive. It's going to be some additional guidance that set out principles that NPOs can adopt if they choose to produce these kinds of supplementary statements. But we'll be including that as part of Exposure Draft 3. So, you know, that's something that we are absolutely working on, and there'll be an opportunity to consider and comment on at a later point. So yeah, very much in the thinking.
I know it's front of mind for many people, so that's great. Here's a question, not so much about the framework, but sort of application and adoption. Is this a general standard where there's no specific regulation within that jurisdiction, or would it sit above existing regulations in a given jurisdiction? Philip, I'll give that one to you.
I will. So this is designed to be an internationally applicable set of guidance. We have no authority to impose this guidance on any individual NPO or jurisdiction. What we are trying to do is create a set of guidance that any NPO or jurisdiction could take, should it deem it appropriate for the NPOs and the context in which it operates. In the same way that individual, say, governments are free to choose IPSAS as their guidance should they wish to. So if a jurisdiction already has NPO guidance in place, so the UK has the charities SORP, Australia and New Zealand have specific guidance applicable to NPOs, they may decide to continue with their own guidance. They may over time decide actually the benefits of utilizing an international set of guidance outweigh the benefits of maintaining their own jurisdictions. It is very much for the individual jurisdiction to decide. I think what we would hope is that where a jurisdiction doesn't have an existing set of guidance, if they are considering bringing in financial reporting guidance for NPOs, INPAG would be the first place they'd look, because it is designed to be internationally applicable rather than applicable to any one jurisdiction's legal or political or economic position.
Brilliant. Now I've got two, Karen, yeah, come in.
Sorry, just to add to that, we are working very closely with donors as part of this project, and getting their feedback and input. And as part of that process, we would be looking for donors, the big donors, to be embracing this as well. And there is a possibility that they might adopt this as the basis for their financial reporting. So even if an individual jurisdiction doesn't adopt it, particular donors may use this as the basis for their future reporting on those specific projects where they require reporting. So there are probably slightly two different perspectives on that, and it's just useful to flag it, I think.
Brilliant. We're a bit out of time for questions, but there's two technical ones that I'd really like to get into this session because they really relate to framework. One is prudence, not a qualitative characteristic. Where does prudence fit into this? And the second one is about the current value management for assets. And isn't there a big risk of that leading to overestimations? If you could be very briefly on those, Phil, please.
I will be very brief. So prudence is a part of a qualitative characteristic of information. So we include it within faithful representation and the requirement to have a neutral depiction. So if anyone wants to really look into the guidance, if you go to G2.22 of the section 2, we say that neutrality is supported by the exercise of prudence. So we have included prudence as part of a qualitative characteristic of the information in accounts. On current value measurement, I think that there's also a risk of undervaluing assets if NPOs do not use it. And it links to our inclusion of service potential as well as economic benefits. So if you have been, say, gifted, or you have a building that you're using that was purchased very long ago, and you're holding a historical cost in your accounts for effectively nothing, actually, if you're relying on that asset and you are using it and you are generating a lot of benefit from it, showing that in the accounts, ensuring it's accounted for, showing users what it would cost to, say, replace that asset if it were to be lost or damaged or misused, I think is also very important. So we're giving options. We're not mandating anything, but providing the options for either historical cost or current value, fair value, value in use, I think is very important because it allows NPOs to really look at what their users need, and hopefully will generate real, actual day-to-day finance improvements as well.
Thanks, Phil. Now, I've got the first question here from Alan Morgan. Are there circumstances where a government-controlled entity or a public sector entity should use this standard? Is this a grey area? We're talking about public benefit and things like that. Philip, do you want to take that one?
Yeah, well, it's a very good question, Alan. And we did receive some responses to the consultation paper where people weren't sure if INPAG was expected to apply to government and public sector entities. I think the first thing to say, which we often reiterate, is that we have no authority to say who will use this guidance. It will be for individual jurisdictions and individual entities, whether they adopt INPAG once the guidance is complete. In some jurisdictions, financial reporting guidance for NPOs is included as part of the broader framework of standards for all public benefit entities. So that would be government and public sector entities and non-profits. What we've seen, though, is when that is the case, normally there's quite a clear distinction between which standards apply to government and public sector bodies and which apply to other non-profits. For our project, we do not have an objective of providing financial reporting guidance to government or public sector entities. So we are not examining some of the transactions and events, economic events that would only be relevant to public sector entities. So we think for most government and public sector entities, their users' accountability and decision-making needs are going to be best met by them preparing financial reports under public sector accounting standards. That said, some of what we are doing is effectively, because IPSAS is part of our framework of standards that we can draw upon, some of what we are doing is effectively creating IPSAS light versions of certain requirements. So it may be, even if they're not applying INPAG as a standard, government and public sector entities might look to INPAG for useful guidance to assist them in applying IPSAS or their own government and public sector standards.
Brilliant, thank you, Phil. And I will just add that yesterday's webinar on describing NPOs, which types of entities are NPOs, goes into some more detail about that one of the criteria of being an NPO is that you're not a public entity, a government entity. So great. There's another question here which links very much to the content for today from Jose, and it's about this idea of power when an NPO has power over another entity. Is that talking about when the other entity has shares, like a company that provides goods and services or something that's relevant to the NPO? Or are you talking about when an NPO controls another NPO, like a branch in another country? Would you be able to clarify on that?
Yes, so again, a good question. And consolidation and control is as we found, a very tricky area in the NPO context. For things like possession of shares, if an NPO owns the majority of shares in another entity, I think we'd see that as a classic case of control existing. As a majority shareholder, you can effectively control the activities of that other entity. We are following an IFRS approach to consolidation. We haven't looked yet in detail at consolidation. That's for a future phase. But if an entity owned the majority of shares of another entity, we'd expect control to exist. If it was a minority shareholder, and I think the example here is that an entity is producing goods available to the public, but also providing those goods to the NPOs, this is where you sort of look at what level of control the NPO might have from contracts with that other entity, whether it has on the basis of that, the potential possibly to govern the financial and operation policies of the other entity. In those cases, we have, and it was in yesterday's webinar, we have included a rebuttable presumption where if an NPO does have the power to govern financial and operation policies of another entity, we'd again assume control would exist. But if it's only, say, buying certain goods from another entity, just like another member of the public could, that for us wouldn't be a demonstration of control or a demonstration of power. With branches, it will very much, I think, depend on the individual arrangements that are in place for that branch. If it is what we see as an internal branch, where there isn't a separate legal structure, it's using the name of the reporting NPO, say it's raising funds solely for the reporting NPO, that to us would indicate actually that it is part of the main reporting NPO, that almost isn't a specific entity on its own, it is part of that broader NPO structure. If on the other hand, there was an individual legal structure, the branch had, say, a different name to the reporting NPO, it didn't present itself as a representative of the reporting NPO, and it acted on its own with regard to operating and financial policies, that might be an indication actually that that branch is an NPO on its own, and reporting NPO on its own isn't controlled and wouldn't be consolidated. Sorry, quite a long-winded way of saying it is quite complicated. We do have a set of principles. I hope those principles, when applied to the circumstances that are being alluded to, would give you an indication of what we intend with respect to control and consolidation, and that the questions we've asked people to respond to would allow you to know whether you agree or indeed disagree with that approach.
Thanks, Phil. So yes, the controlled entity could have shares and be a profit-making company, or it could be an NPO. So, and that again came out very clearly in yesterday's video. So I'll send you a link and encourage you to go there. There's a good question here from Carlos about the name income and expenses. Did we consider resources and expenses? I know in the UK, they have gone for incoming resources rather than income. Why have we gone for income?
Karen, would you like
You
to?
want to take that? I like these questions that cross our events, and this is very much something that we'll talk about in tomorrow's webinar. There have been a number of different suggestions about the names of this statement. I think a lot of it kind of depends on your background and what you might be used to in your jurisdiction. So there have been multiple suggestions for this. I think one thing that everyone is agreed on is that it shouldn't be profit and loss, but there are other alternatives, and we did consider a range of alternatives, but we kept coming back to the statement of income and expenses as something that was widely recognised globally in terms of understanding what would be covered in that statement. We do have a question about this in the exposure draft and seeking kind of further feedback on the name of that statement. So if you've got particularly strong views on that, we would love to hear from you and your thoughts about that and the reasons for it. That would be fantastic.
Great. There's a question from Paul. Is this standard just for financial reporting, or is it also about some more operational reporting like grant reporting, which is of course front of mind for many NPOs? What's this standard covering?
Shall I pick that one up? This is covering general purpose financial reports. So the idea is that it's not being developed for one individual or any individual stakeholder. It's something that will be of interest to a range of stakeholders. The question of project reporting or program reporting, which tend to be aligned with grants that people receive, comes up frequently, because that is something that many NPOs experience in terms of the kinds of reporting that funders request for them. We are looking at this as part of the project. At the moment, we are calling it a supplementary statement, and we're looking at developing a principles-based approach to a supplementary statement that NPOs could use to report on grants or projects or programs. That work is ongoing at the moment, and our proposals will be included as part of Exposure Draft 3. So we're at the very early stages of that at the moment. So it is possible that we will have something on programs, projects, grants as part of the proposals included within this standard. But anything that we do around this would be optional and not mandatory, but we would look to provide guidance where an entity is wanting to provide this kind of additional information.
And can I just follow up on that as well? I mean, one of the main purposes of INPAG is to provide common reporting standards. So even for things like grants, we're looking at the moment how NPOs will account for grant expenditure, how they will account for revenue from grants they're receiving. If there is a common way, even if it's just for financial reporting for accounting for those, we are hopeful that that will reduce the burden on NPOs as donors say, look at that, see that this is common across NPOs, that this is common internationally as a way of accounting, and we'll look for those when they develop their own requirements, rather than each individual donor coming up with their own way of making NPOs account for grants and revenue.
Brilliant, thanks. There's one more question here regarding the income of a controlled entity. So an NPO controls another controls another entity. Should it be recognized in the statement of income, subject to classification and its structure, or directly within net assets? Income from a controlled entity, where would that go?
If it is a controlled entity that is fully consolidated in the sorry, this is going to sound very technical, but in the consolidated financial statements that shows the group position, income for a controlled entity, income for the controlling entity, it's one and the same effectively. So from a group perspective, whoever has that income, it's income. If, say, we get into the even trickier thing of non-controlling interests, where you aren't fully consolidating, there may be income that could potentially be recognised in the statement of changes in net assets from a non-controlling interest perspective. That is something, if people are very interested in, will be examined, I believe, in tomorrow's seminar, where we look at how these individual items will play into each financial statement. But generally, a controlled entity that's consolidated, we'd expect it to be in the main income statement.
Brilliant. Thank you, Philip. I'm going to move us on to the last stage of our webinar now. I've got a few more minutes. It has been really, really interesting to hear your questions and the types of issues and ideas that it has brought up. You're really welcome to share your thoughts on any aspect of this first exposure draft, but the project team has drafted specific questions for you that we're particularly keen to get feedback on. These specific questions are in a document called the Invitation to Comment, which you can also find from the website. Please share your views until the 31st of March. We hope you will use your voice to shape the future of the guidance. You can use that link to submit a response. Go to www.ifr4npo.org/have-your-say. Responses must be in English. You can also fill out this very short form to let us know that you intend to submit a response so that we can support you as needed. That's very helpful for us to know who we should expect to receive responses from. So please do take a minute to fill out that very short form, which is in the chat now. It's very short. Okay, finally, thinking about the next steps and what's ahead. The next 2 exposure drafts are planned to be released around the end of June and November 2023. Feedback will then be used to draft the final guidance, which we expect to issue in 2025, ready for adoption and use. After this webinar, you will receive a follow-up email with the slide decks and all the links that you need. So my final word is to say thank you so much for joining us on this journey to improve the quality, relevance, and consistency of financial reporting in the sector. Please do share your voice, do stay in touch by visiting our website, following the project on social media, reading our newsletters, and you can always reach out to me by email. I'd like to give a final word of thanks to Karen Sanderson and Philip Trotter and Brian Menya in the background, and to all of you for joining us today. Thank you so much.
Thanks very much, everybody.
Thank you.
Yeah.